BlackRock is eating crypto's lunch, while Donald Trump is literally feeding crypto lunch. Yes, we once again have a week where we have a tale of two cities. We have the legitimate side of Bitcoin and crypto, and of course, the ridiculous side of crypto. There's a few stories that are going to support both sides that we're going to break down on this show today. We're going to do it right now. Let's go. What is up, everybody? Welcome to the Daily Wolf on Yahoo Finance. I am your host, Scott Melker, also known as the Wolf of All Streets. As you can see right down there, you can find me at Scott Melker. It was right down there. We're going to spend the next 15 minutes diving through a mountain of news and separating once again the signal from the noise. And I have to say that 99% of what crosses the tape right now is noise. Something that is definitely a signal and that I always pay attention to is Fidelity and their research team. And about an hour before this show, I got an email in my inbox, and it was this right here: the Q2 2026 Signals Report, a quarterly breakdown of key metrics that could be affecting price and investor sentiment. Fidelity has been one of the leading institutions in crypto for a very long time, mining since the early days. Very, very, very bullish on crypto and building infrastructure for it. So when they speak, I always listen because I know that other institutions are listening as well. So to give you the TLDR on their entire report, basically they view the market right now as consolidating. They don't see a major reason for massive upside in the short term, but also don't see a reason to go back below 60,000 where Bitcoin bottomed recently. So they see this period of consolidation and potentially sideways price action, but there are reasons in their view to be optimistic. One of them, the net unrealized profit and loss of Bitcoin holders, which is a metric NUPL that they look at, is at a level right now that has historically, in over 50 instances, preceded the next year, having 63% upside returns for Bitcoin. So I found that very, very interesting. What I also found interesting is that they pegged Solana and Ethereum growing massively with transactions as utility, but price not following. So Ethereum transactions are up 34%, Solana addresses up 50%, but the coins themselves and the prices are clearly still in a dead bear market. So their prediction, obviously, is that price will eventually catch up to fundamentals and that these will likely rise as well. But when I read this, the part that they didn't say that I find is the greatest signal is that they only dug into, in this very long report, Bitcoin, Ethereum, and Solana. So you can tell exactly who's on the institutional whitelist right now. And this aligns obviously with the popularity of ETFs and where we can see flows going institutionally in general. It also aligns with what I've been doing with my own portfolio for the past few years. Large allocation to Bitcoin, smaller allocations to Ethereum and Solana, still holding a lot of the dust from previous cycles, but those are the only three that I've been focused on, and it really is for this very reason. So if that's signal, let me give you something that is noisy but has some signal in it, but it definitely ventures into the realm of completely, sadly ridiculous. Trump's crypto luncheon draws superstars, but his token hovers near low. So just what we need is Trump laughing in the face of the Democrats who are trying to stop the Clarity Act by having a meme coin gala at Mar-a-Lago on a Saturday. So what happened here? The 297 largest holders of the Trump meme coin were invited to attend. You see jockeying and buying of the token in advance of this. This is the second time that's happened. A select few at the very, very top get a special champagne luncheon with the president. But if you want to border on ridiculous, we had basically Mike Tyson opening for Donald Trump and Tony Robbins in the Coachella lineup that you never asked for. Literally, Mike Tyson opened this thing as the first speaker. But what I do find interesting is everybody knows the optics around a meme coin gala right now are terrible. The Trump family's been under heat for their crypto activities. We have Clarity Act looming, and this is largely the largest issue, but you still had a lot of legitimate people that decided to show up. I mean, you have the CEO of Tether, Palo Arduino, Cathie Wood, Grant Cardone. I mean, a lot, Tony Robbins, as I said, Tim Draper. These are very, very established, very serious people who chose to show up and speak. Now, I heard that most of them spoke at the beginning and left before the gala itself basically began. But still, it makes you wonder, knowing the optics, knowing that that picture of them with somebody at the meme coin gala is going to be shown on Capitol Hill by Friday in a congressional hearing, that they still choose to show up. So I'm assuming that if you get an invite from Donald Trump to speak at his meme coin gala, you don't say no, no matter what. And that's probably what's happening here. Or that you see the value of being under the Trump tent right now in the crypto industry as more valuable than the poor optics of attending a meme coin gala. But as I said, the bigger problem here, not necessarily the gala itself, it's the timing. We have the Clarity Act in markup, hopefully soon. We have fundamental disagreements already between the banks and the crypto lobby about stablecoin yield. But the real fight, and the one that Trump is giving endless ammunition for to his opponents, is the ethics clause. The Clarity Act, which gives us the market structure that we've long needed and effectively begged for, the sticking point on that is this clause that the Democrats say that the Trump family and others should not be able to benefit from the crypto industry. And Trump on the other side saying, I will never sign a bill that says I can't benefit from the crypto industry. Now, on the Trump token alone, now, some people think they've made billions of dollars in crypto, but on the Trump token alone, just in the trading fees, Donald Trump and his family or organizations have made roughly $320 million, are the estimates, if not more. Obviously, they hold 80% of the supply, which is slowly released, which they can sell on the market to make more profit. And obviously, when they have a meme coin gala, the token goes up because people are jockeying for position to get into it, and they can sell into that buying pressure. So there's a lot of mechanics for the Trumps to make money on this meme coin. And in this case, a lot of people rightfully pointing at that as a reason not to necessarily pass the Clarity Act. So once again, we have a bit of an own goal here from the Trump organization in the crypto space. But something that's definitely a signal is this right here. Spot Bitcoin ETFs see 9-day inflow streak as investors show resilience. These things are on a heater like Joe DiMaggio on that classic hit streak. I mean, absolutely cooking right now. And it's not just that they've had steady inflows and almost billions a week now at this point. It's the fact that BlackRock's Bitcoin ETF just hit a massive milestone that proves crypto is now a mainstream bet. So what this is that open interest on BlackRock options, which have only existed for 17 months and had a governor on them for a very long time because the trade size was very limited, these have surpassed Deribit, which has long been the leader in crypto options and has existed for 10 years. Now, to be fair, Deribit exists offshore, does not exist in the United States yet. So anyone who wants access to these trades and options will obviously choose IBIT or BlackRock in the United States. But this might give us clues as to where some of those massive inflows are coming from. So as much as a Bitcoin enthusiast, I would love to tell you that this is massive institutions buying Bitcoin or millions of retail investors plowing in. The truth is, when you align the size of open interest on Bitcoin options here through IBIT, not through underlying Bitcoin like Deribit, but through IBIT, when you align that with this streak, you can put together a picture of a very interesting trade that Wall Street is probably making and is consistently made on any asset like this, which is where you effectively buy the underlying asset. In this case, it's IBIT. You short the futures in contango and you earn a yield in between. It's a kind of a free money trade, the cash and carry trade. And I have to imagine that that is a lot of what's driving these spot flows and the massive options interest. You take a look at the product that Goldman has proposed, the interest ETF on Bitcoin, which will hold IBIT and sell calls on the other side to offer interest and yield to the people who buy that ETF. And it shows you that that's likely what's happening here. But at the moment, it is very, very, very clear that IBIT is leading and that Wall Street is leading in flows for Bitcoin at the moment. And, you have Michael Saylor buying every single week too. That obviously doesn't hurt. Now, the next story that I just want to touch on is this one right here. So this is the story you'll read on the mainstream media. Fed Chair Powell confronts his final big decision, stay or go. For our purposes, we'll let Bloomberg and Fox Business and Yahoo Finance on their other shows unpack the implications of Jerome Powell potentially leaving, whether he won't, what Kevin Warsh means. All I know is that Kevin Warsh is a crypto degen. This guy, that's not the picture I meant to bring up. I'm just kidding. He was called a sock puppet there. And then, last week we talked about his hair. It's amazing. He looks like Dark Helmet. And I'm going to be honest, 10 minutes ago, we were working on memes and we settled on this one. He's a sock puppet who's also Dark Helmet, who's testifying in Congress. But either way, Kevin Warsh, as I told you last week, has a massive crypto portfolio, over 30 investments. He's not going to use his position at the Fed to pump his bags as much as people in the crypto media might say. So he's going to divest his interests. But the story to me is that having this crypto-friendly Fed chair means you have somebody who actually understands the industry, actually understands the asset class, how it works, how it moves. You can see this through where he's actually allocated his capital, who's going to be in charge of one of the largest agencies that's not officially a part of the United States government, the Fed. You align this with a Paul Atkins, who's a crypto believer at the SEC, with Michael Seelig, who's a crypto believer at the CFTC, and you can see exactly where the puck is moving. We have a lot of very smart people who are very, very passionate about crypto in major positions of power, and in my estimation, that is only a good thing. So I assume that Warsh will get confirmed at some point. I do assume that Powell will step out of the way. We curiously had the DOJ drop their probe that was the blocker just in time for Warsh to likely get brought in. So I think that this is a massive positive for the crypto industry. Now, something that has been long debated over the past few months, whether it's a negative, positive, or what it really means for the crypto industry, that definitely has some signal and noise, is this story right here. Coinbase Quantum Advisory Council publishes position paper on quantum computing and blockchain. So if you haven't been paying attention, there's been a whole lot of fear, uncertainty, and doubt around quantum computing and crypto. Many assumed it was decades away, but we recently got a paper from Google that said as soon as 2029, quantum could become a threat to all systems, including Bitcoin and crypto. So to be clear, there's no threat to Bitcoin itself. The threat is to wallets that are not quantum proofed. And we know that there are millions of tokens being held in wallets where the people are likely dead and they're inaccessible or have lost their coins, including the original Satoshi coins. So the question isn't whether Bitcoin breaks, it's whether somebody is able to access those tokens through a hack. By the way, hacking is still illegal last time I checked. But Coinbase had largely stayed quiet on this issue, and now they've clearly decided to step in and be the adults in the room. So they made a lot of really interesting points. They said the quantum threat is real but not urgent, that we probably have a decade and that 2029 is not realistic. They said that Ethereum and others, because of their actual centralization, have teams working on it, and Bitcoin has proposals nobody's adopted. And this is kind of the push and pull of crypto. You want true decentralization. You want Bitcoin to have no founder, for Satoshi Nakamoto to be anonymous and likely dead. But then when it comes time to come up against a threat, there's no centralized authority that can come to a consensus on how to deal with that. So the thing that makes crypto valuable, which is that no one is charged, makes it the hardest thing to defend with the quantum threat. So it's really the bottleneck here is governance. The threat is technical. But even if the worst, this is how I like to play it out, kind of the game theory. First of all, most of those wallets will become quantum proof by the time this is an issue. We have time. But second of all, even in the worst case scenario, we have this piece of math right here, the 145 billion math why Bitcoin's quantum threat is manageable, not existential. So our worst case scenario by the time quantum is real is probably 1 to 2 million coins. Definitely the Satoshi wallet. They're estimating 1.7 million coins would basically be hacked. So if they're hacked, the worst case scenario is that all of those tokens are market sold. Somebody hacks them all and sells them all immediately into the market, crashing price. So first of all, Bitcoin has had many crashes and has always bounced back. We don't call it the honey badger for no reason. But in previous bear markets, we've had more selling pressure than this. Over 2 million, 2.5 million coins net sold in previous bear markets, and Bitcoin has always found a bottom, found demand, and bounced back. If anything, in my humble opinion, as a Bitcoin believer, this would be the ultimate generational buying opportunity for Bitcoin if this actually happened and price crashed 75 or 80% overnight. I also don't think that a hacker would be incentivized to sell all of those tokens at once. But there's even more ridiculousness, of course, because when there's a quantum threat, you have a lot of really bad solutions floated. Longtime developer wants to split Bitcoin blockchain and reassign Satoshi coins. So I've seen some bad takes on this. You can't reassign Satoshi coins. When you fork it, you keep the existing ledger, and then the future ledger is split. So they can reassign the mirrored version of Satoshi's tokens, and they're proposing that they do it to developers to fund this split. This is complete noise. The Bitcoin community will lose their minds over this. Everybody will actually get free money in the fork, but you can't reassign Satoshi's tokens. This will have nothing to do with Bitcoin, and I highly encourage you to ignore all of the debate around it because it's going to be a waste of your valuable time on this earth. Now, once again, we have a consistent theme, which is the legitimacy of the industry on one side and the ridiculousness on the other. BlackRock and the ETF issuers are sucking up Bitcoin supply at a tremendous rate alongside Michael Saylor, as I've said before. But at the same time, you have a meme coin Gala at Mar-a-Lago that's ammunition for the anti-crypto army to fire. We're going to see how this all pans out over the next few weeks with clarity. That's the Daily Wolf. I'll see you tomorrow. Peace.